SOFI update here on the 15th. Let's go over the short-term, medium-term, and long-term projections here. Starting off on the smaller time frame. So we had this move down here. I think that this is one entire wave here. So ABC down. Then we get this move up. Get this structure right here. This, in my opinion, is an ABC move. So you can use parallel line here. And you'll see that this hits the outside of the parallel line, so the whole thing is ABC, ABC, ABC. So now we're at AB. So AB, and we'd be looking for the 1.61 fib as a potential max for this move. And that takes us right to 1670 basically. So that means that we should be in a C wave right here. And that's basically what's happened so far. It looks to me like 1, 2, 3, 4, and 5 like this. So that's just projection there. It could go higher than that, but I would expect January 30th to probably be the high. Hit the very top of this and then back off a little bit. So I think we're in a fourth wave right now. It could play out like this and then go up, or just go straight up here to 1670 on Tuesday. So then we got to look at if this is A and then this is ABC, this would be the overall B wave, or this is the A wave. We know it's not a first wave because you can't have a corrective structure for a first wave. So we got to figure out if this is a B or this is the start of the B wave. I would say, based on looking at the daily standard deviations, that it makes more sense that it's actually the A wave of the B wave. So I would actually be looking for something like this, maybe pull back a little bit and then move up here to fill the gap here at 1784. Let's see where the 1.61 fib goes to. And it actually goes right to that. So that would be my projection on the short term as the most likely scenario. But it is possible it goes like this too. Could go like that as well, because this could be the overall B wave, and then this whole thing would be A, B, C. So that is the short-term count there. Those are my two possibilities I see. I don't see this. I don't see going to new highs because that wouldn't make any sense based on the structure of it. So I've narrowed down the short term to two different possibilities. Let's go over why I think that. If we go to the medium term. So medium term, we're at the very bottom of the standard deviation. Well, actually now we're at like -1. But it doesn't really make that much sense to go like this and come down to 3 or 4 standard deviations. That's why I said I'm leaning towards it going like this and then filling this gap at 1780. By the time it hits 1780, this will probably like change, and it'll probably be at like 2 or 3 standard deviations, or like neutral, maybe +1, maybe +2, we'll see. But that's why I'm leaning towards that count. So now if we go to the long-term count, there's two possibilities on the long term, in my opinion. Those possibilities are, we go like this, go like that, come down here, and then we get 3, 4, 5 like that. Or we get something down here, we bounce, and then come down farther like that. So you're wondering, why would you say that? That would be at like -10 standard deviations. This changes as time goes on. The longer that you stay like sideways, it will completely flip. So this will never be at -10 standard deviations. But the reason that I think on the long term this makes a lot of sense and is the other account that I'm looking at, is because on the weekly, we are way overextended still. That was a huge move. If you look at the last time we went up, it took us a year of consolidation. Now we've made 5 waves, and we're just starting to consolidate. So that's why I say there's only 2 options. The 4th wave being done here is not an option. That's probably not going to happen because it would be too quick for us to go up like that. There's only a few times where I've seen in the last like couple of years where it's done that, and one of them is Palantir. Palantir just straight up, like that's something you can't project. It just extended, like you can't project that at all. So that's more if you're holding that because of like future growth and you think the fundamentals are going to catch up, then it makes sense to hold. But if you're trading that, I'm sure traders sold a long time ago. That's one time where a long-term holder is going to kill a trader. So anyway, that's basically my reasoning why I think that this makes a lot of sense to come all the way down here, potentially to 1227 to 1109, because this took a year and we're only about a month or two into this correction so far. So if we don't get that extension, that five wave extension, which is 1, 2, 3, 4, 5, like that, then we're probably going to get a deep 4th wave. And so if we go up to 1750 or 1780, that could be the top for a long time. That could be the top for the next like 4 to 6 months. And it could look exactly like this. Come up here to 1780, then this would be A, B, C, and then that wouldn't be the end of the 4th wave. That would be too short and too short in time length. We'd probably go sideways for a while for a B wave and then finish off with a big impulse down. So zooming out, let's go to the log chart now. Go to the weekly. Actually, let's get rid of this. So I have it drawn up here. This would be 1, 2, 3, and then you just get some sideways action coming over here into like May, June, something like that. And then we would get a move up here. My target is 32 bucks. So if we do get that extension, you're probably looking at something up in here for the end of the 3rd wave. But if we don't get the extension, you're looking for a 4th wave down here and then a move up to 32 bucks. So it's not really that big of a deal, but what comes into play, you saw those June $10 puts. It's possible that it comes lower than that too. This is like the best spot that I could find on the chart here. I think this is a daily demand zone between 1101 and 1220. And let's look at Tesla now and compare the two. The exact same chart. So since January or the end of 2022, we did the exact same thing. And now we're correcting. So on Tesla, we either can go to new highs, and this could be a 4th wave on Tesla. So this could be like that. But again, the same thing as I said on SOFI, we're at the top of the standard deviation, so I think it makes more sense that we have longer consolidation. This consolidation took about 9 months. We're about 2 months into this. So I think on Tesla, it actually makes more sense that this goes maybe to 400, maybe 450, and then gets one more move down here. Probably crosses back into the 1st wave here at 300. And then from there, you can see I have it circled up there. It goes up to 700. So they're both showing that they need more time to consolidate. Is it possible that I'm wrong and it will be a short 4th wave? If it wants to pull a Palantir move, then okay. If the market goes straight up from here, then okay. But I'm just doing this off probabilities based on how long the 2nd wave was. And I think it makes a lot of sense. Like on Tesla, I think it makes a lot of sense. This is a diagonal because this looks like an ABC move to me. This looks like an ABC move to me. And so this would have to be an ABC move. So that's basically my reasoning on why I think it makes sense that we come down farther, more than likely, unless we get an extension. So if that extension happens on SOFI, I know I'm stuck here on Tesla for a while, but real quick, if that extension happens on SOFI, then that means Tesla would also go like that. SOFI would go to 22 bucks, Tesla would go to like 580. Because 580, similar to SOFI at 22 bucks, 580 is also the 1.61 fib. So I'm relating these charts because they move the exact same since 2023. I don't know why. I still don't know why. I ask that question all the time, but they're the same chart, the exact same chart. So I think on both, it makes more sense long term. Something like that. But I will watch short-term time frame, and we'll see if it's possible that we end up making an extension. Right now, I don't think it's possible on the smaller time frames because we have a corrective move here. So I still think we need to come down at least one more time. It's either going to be this or it's going to be this and then come down like that. So basically, I'm saying if you're trading, you probably are going to want to sell up in this area at 17.50 to 18 bucks because I think it's not going to go and make a new high right away. So that's my explanation of why I think a deep fourth wave makes the most sense, but that extension is still possible. And I gave you the short-term time frames as well. I'm looking for 1670 next week. We'll see if we get it. And yeah, that's pretty much it. So leave me a comment, like, subscribe if you're not already, and let me know what you think. Do you think that we're going to get a deep fourth wave, or do you think we're going to go straight up? Do you think the market's going to go straight up? Anything you want to comment, let me know. That's it. I'll talk to you soon.